the things that you should be focused on is not how big a win can I get. It should be focused first on how much your capital you can lose.
Understanding what sort of strategy provides the expectancy value, and then whereby you could actually place a good risk management systems around this strategy.
Until you get deeper and deeper and the market burns you enough that you start to reflect. The market has to burn you, then you reflect.
The key is in psychology, is in the mental side of things.
Yes.
Risk management is in place to help with psychology.
Definitely.
You agree on that?
Definitely. Hey, welcome back to the third edition of us reacting to a trading-related story that our team found on Reddit. So in case you don't know who we are, my name is Juan.
And I'm Dixon.
And we are the co-founders of TradeX Prop. So without wasting any time, let's take a look at the story. The title of this Reddit story is "This Changed My Trading Forever." Early in my futures day trading career, I was obsessed with big wins. And like many traders, 95% of my time was focused on strategy and setups. Any strategy can work. When you place a trade, the odds are theoretically 50-50.
Bold statement from the start.
Yeah.
It's quite I think it's a bit confusing at the start as well. Because he says he's spending 95% of the time building strategy. And then he said any strategy can work. I would agree on the point whereby any strategy can work. I totally agree on that. But it depends on how deep of the analysis you did for that strategy, right? So I think EMA strategy works, MACD works.
Yep.
It depends on, number one, whether if you have a proper risk management in place. The most important part would be the expectancy value. I think I recently just did a presentation in that regard. Understanding what sort of strategy provides the expectancy value, and then whereby you could actually place a good risk management systems around this strategy. Okay. So I think the 50-50 chance probability of whether a strategy can work, I think in simple terms, yes, I would agree on that.
Yeah.
Because you either win or you lose.
Yeah.
Right. But if we are to go deeper than that, I think there's a lot more to uncover.
Definitely, it's a definitely oversimplified understanding of the probability in at play, right? Because I mean, basically the reason why we have a trading system, we backtest, we forward test, we try to find a statistical edge, right? That gives us over a certain period of time, that gives us, like what you say, positive expectancy value. So which means the strategy has to be profitable over a certain period of time. So which means that, generally your probability is improving. So it's no longer really 50-50 per se. If you just enter a trade without understanding why, randomly placing trades here and there, it's very highly likely that you will be losing your money, and it's not a 50-50% chance anymore. Right? That's why 95% of traders are not making money.
Because even if he found a strategy which provides a very positive EV, I think even if the odds are only 30% in his favor, he can still make money.
Yeah.
That's for sure.
With risk management.
With risk management, definitely.
Also, another thing here I see that's a little bit problematic is I was obsessed with big wins. Definitely, I think you can relate.
I can definitely relate.
Yeah.
But the good thing is he's stating that he was.
So
I'm interested.
He's no longer anymore. Yeah. So, but just for the benefit of the viewers, so why this is problematic is because I would say that if you're obsessed with big wins,
obsessed is such a strong statement.
So, and big wins does not correlate to profitability. It does not necessarily mean that you're overall profitable, right? You're obsessed with big wins. So sometimes there can be smaller wins that you can, higher chance, higher probability of winning trades, but they're small, but you don't want to take it because you're obsessed with big wins.
Only big wins.
So it's a problematic way of looking at your trading.
I think it affects the psychology a lot.
Definitely. So that's why, I mean, the things that you should be focused on is not how big a win can I get. It should be focused first on how much your capital you can lose. And then look at profitability over time. So that's what you should be looking at instead of... so sometimes you can be profitable with a lot of smaller trades, but you're not looking for that because you're looking for a big win. So I would say it's a bit of an ego problem.
Or if it's only chasing for the bigger wins, and then he neglected the fact of having smaller wins,
Yeah,
right? I mean,
that's
like
why.
in trading, I think gratitude is underrated as well.
Yep.
I think you should be grateful, let's say, when you have wins. I mean, winners are winners. You should be grateful with that,
Yep.
right? Because if you're only chasing for big wins, I mean,
It's an ego thing. lah.
it's an ego thing.
Yeah. Okay, so let's move on to the second segment. Two people taking a trade at the same level, one short and one long. Both can make money. Of course, this depends on the time frame they're trading. Markets are fractal, so in theory, both long and short can make money.
I agree on this.
Yep, not much more to be said, but definitely because either way that the market is trending, whether it's bullish or bearish, there's always going to be retracements either direction, right? Especially more so if you're looking on the smaller time frames, the retracements are going to get larger. So there's always opportunities to go both long and short and make money at the same time.
Yep.
Okay, so not much more
And
to add.
depends on the time frame that they are looking at.
Yeah, exactly.
Totally dependent.
Okay, so third segment. The game changer for me was flipping the focus. So now he's changed.
Okay.
Now he's spending most of his time on risk, psychology, and money management. So previously, it's 95%. He's only looking at strategies and setups, and 5% for everything else. So which means he's neglecting his risk and this psychology and money management, which he's now addressing. So he's now shifting to aiming for smaller, consistent daily gains, just 50 to 100 a day, while keeping losses even smaller.
Mm-hmm.
Each trade, he's risking 50. So he's prepared to lose 50 per day to gain 2 with a max daily trade of 3. So 3 trades a day, willing to lose $50 a day and aiming for a $50 to $100 return.
Okay. I think he definitely grown,
Oh, definitely.
right? Because right now he's focusing on the right stuff. Most traders, when they start off, I think it's almost in the same condition.
Mhm.
Like for me, when I started off, I'm also looking for big wins.
Mhm.
Until I know it's not so realistic
Yep,
for all the big wins to happen like every single day. Right?
definitely not. Yep.
It's definitely not. But maybe once in a while, couple of months, when there's a really huge trend coming and you manage to catch that trend, yes, you'll get a big win,
Yep.
right? But it's not a thing whereby we could chase every single day. So he's focusing on risk management, money management, is it?
Yep. Yep.
And what again?
Psychology.
Psychology. I think this is a good approach. I think he's more experienced right now.
Much more.
Okay, but I do have something to add on capping his
Gains?
gains. Okay, so right now he's talking about having a 1 to 2 R,
Mm.
1 to 2 risk
At least 1 to 2, yeah.
at least 1 to 2 risk to reward. I think that's good.
Mhm.
But let's say if he is limiting himself with the dollars and cent,
Mm.
because he's talking about risking $50 to $100, right?
Mhm.
I think it would be best if we could measure this in percentage terms.
Okay.
Okay, because $50 to $100, right? It depends on what account size is he trading on right now. Is he trading on with a $500 account
Oh, okay, yeah.
or
So
or a
how much
$1,000?
capital?
How much capital, right? So if you're only measuring in dollars term, then let's say one day if you were to manage a bigger accounts, are you still going to trade $50 to $100?
Definitely.
So I think it would be best to change the
The way of looking at it.
way of looking
yeah,
at it,
instead
change
of
the
a dollar
measurement
value,
from,
right?
from dollar value. I think it
Percentage.
would be best if we could change it to a percentage.
I agree.
Yeah.
And what I like about this is that it's much more clearly defined as opposed to earlier on. 95% of the time, he's only looking for setups and strategies,
Mhm.
and that means he's only spending 5% for everything else, which is he's barely looking at his risk and money management. And now he's flipping it around. It's much more well defined, his trading system and his risk management. So that's good. And also when he caps it at a 3, so there's always a reason why you would cap your maximum trades per day, right?
Yeah.
It would always
That's very good.
yeah, so he probably have a certain level of self-awareness, and he knows that once it goes beyond 3, his decision making probably goes to shit.
Yep.
Right. So it depends on the individual. Some can do many trades, but I think for most people, your brain has a limited capacity to operate in the optimal range. Right. Once you go beyond a certain point, every single decision that you make, it goes downhill. For this guy, he probably knows that he could do 3 with a sharp mind,
which is very-
level head, and looking at the market, looking whether should take trades, and his analysis, what he could do with 3, so which is good.
when he's only limiting himself to only 3 trades per day,
Yep.
he tends to find higher probability setups.
Yep, correct.
Correct? Because you only have 3 bullets per day.
Correct. And also, another thing that I would like to add, I mentioned this quite a lot of times in previous podcasts, but now that you can see, he mentioned he's looking for small, consistent gains and keeping losses even smaller. To add to what Dixon said, you should not really be capping how much you can earn per day,
Yep.
right? Because you never know that sometimes you need the big wins to bring up your average, right? It will be very important to cover a lot of your losses as well. So, in terms of probability, I was mentioned, generally there are 4 outcomes from trading. It's either you have a big win, or you have a small win, or you have a big loss, or you have a small loss, right? And then, so there are 4 possible outcomes. There's one outcome out of these 4 that is 100% within your control, which is big losses. You can always make sure that you do not have big losses through risk management. You have your SLs in place. You have practice proper position sizing. If you eliminate this possibility of having huge losses, you are now left with 3 possible outcomes, which is small win, big win, small losses. So from here, you can see there's a bit of already, the odds are a bit more in your favor, right? You have big win, small win, and you have small losses. So right off the bat, probability has improved somewhat already, all right? So then you can see he's keeping losses small. Great. That's great. Awesome. And then he's also looking for small wins. Okay, that's good. But you cannot neglect possibility of letting winners run, because this is sometimes the critical aspect that can shift you from a break-even or losing trader to a profitable trader. Because sometimes those big wins just bump up your average, right? So
It's like from his opening statement, he's only focusing on big
Yeah.
wins, and right now he's only focusing on small wins.
yeah,
I think if you could somehow find a balance,
balanced approach.
yeah,
Yeah, don't it should not be one or the other.
Yeah.
Don't limit yourself that way.
yeah. Don't limit yourself with just dollar
Yeah.
amount as well.
Okay, all right. Okay, so let's move on.
Correct.
Once my account reached 10,000, okay, his account is now $10,000. I scaled my approach. This disciplined mindset and risk management strategy protected my capital and allowed me to grow steadily. The key isn't finding the perfect setup, it's mastering how you manage risk.
Kudos.
Awesome. Somehow I feel proud of this guy.
I mean,
Yeah.
I think this is the journey that most traders
Yeah.
go through.
If you stick to it long enough, this is the journey that you're gonna be going through, right?
Because I remember when I first started out trading, right? The psychology part, it's always there. It's like, okay, first you need to understand how, let's say, technical analysis, how it works, right? Fundamental analysis, how it works. And then when you're faced with psychology, it's always like a big no-no for me back then.
Big issues, huh?
It's big issues. It's like, why do I still need to learn about psychology, like in how do I manage myself? But then I think once you truly understand that the key is in psychology, is in the mental side of things,
Yes.
things starts to pick up. But of course, risk management is in place to help with psychology. You
Definitely.
agree on that?
Definitely.
Right? Because if you're risking too much, I don't think any sane person would be comfortable.
Definitely. It's all hand in hand,
It's hand in
right?
hand.
It's a whole holistic approach to trading. There's no one or the other.
But the funny thing is, most traders started out with straight up technical analysis, fundamental analysis, because they're focusing on, I need to get that.
Of course.
Right? It's like psychology, risk management,
Definitely.
like all these are just boring stuff for me back then.
Because I think actually for most beginner traders, it's obvious because I mean for them the knowledge gap that you have. I mean when you think back about when you started, I don't know how to trade. I need to learn how to trade. So to learn how to trade, I need to know strategies, how to trade.
Candlestick pattern.
Yeah. So it's natural to be going through that thought process of straight away you want to learn how to click, you want to buy, and then you have your in your trading view, you have your flashy 10 to 1 hour trades. So it's natural to straight away want to go into that because at that point in time, you have not yet discovered your weaknesses psychology wise. You have not yet realized it until you get deeper and deeper, and the market burns you enough that you start to reflect. Right?
Totally agree.
So the market has to burn you, then you reflect.
Funny thing, people don't work from psychology
No, definitely not.
to
But I think it may be required.
I think it should
I
be
think
a
it's required.
requirement.
You would need to be burned by the market. I think you will never truly understand the value of understanding risk management and psychology until you get burned.
Yeah.
So
Because if I'm losing $10,000 and I tell you, hey, you gotta be careful, right? I lost $10,000 because I did this mistakes. I don't think you can catch that.
no, definitely not. I will not be able to digest that.
Yeah.
Yeah, I think this is great. He mentioned he scaled his approach, so he understands.
Okay.
So yeah, in this way, that means he's maybe thinking about the percentage wise, right? I'm risking now maybe because my account is so big, maybe I scaled my approach. Maybe my position size is a smaller percentage of my capital now.
Mm-hmm.
So which is great. So he's understanding a lot of things on many levels now. So this is awesome. I think some people reading this post think that I'm saying edge and strategy does not matter. As a matter of fact, it is very important in your trading. However, for me personally, risk management is top priority. There is so much that goes into trading, and your decision tree matrix, that one component of your trade does not exist alone in a silo. They all need to work together at one point. Okay, yeah, so basically this is what we talked about just now.
Mm-hmm.
It's never one or the other. It's always everything hand in hand, right? I mean, you cannot take so many trades, let's say, because your psychology does not allow for that. Like this guy, he's chosen 3 trades, right? So the fact that he chose that specific number 3 is because it's a reflection of his own psychology.
Mm-hmm.
So he found that 3 trades, his psychology is fine. So that's why it's everything ties in together. Your psychology, your risk management, the trading style that you use, the time frame that you look at, swing, scalp, whatever, it all ties in together. It never can be just one aspect and then you hammer the hell out of it until it's perfect and then you start looking at this one. No, it's always a whole holistic approach.
Yep.
Right?
I agree on that.
Okay, moving on to the last part. Okay, I think he's giving an analogy here.
Okay.
So imagine you're driving a car and the car represents your trading setup, edge, and strategy. The engine, transmission, and steering components are like your tools to navigate the markets, giving you the power to move forward and make decisions on direction and speed. This represents the research, analysis, and strategies that you employ to find profitable trade. Tires and brakes represent your risk management. Without the tires and brakes, the rest of the car might get you moving fast, but you'll be constantly in danger of a crash. Similarly, no matter how great your trading edge is, without proper risk management, you're risking disaster. The key is balance. You need reliable engine or strategy or your edge to accelerate and the right braking or your risk management to prevent serious damage. Would you take your family out on the road with bald tires and no brakes? Trading is the same thing. I would not take a trade without thoroughly checking my tires and braking first.
Very long closing.
Yep. But
Okay. So it's using the car as an analogy, right?
yeah,
So it's emphasizing on the tires and brakes as
risk management.
risk management.
This ties into what we talked about earlier. It's a holistic approach to everything. You can't have one without the other. You can't be obsessed with one thing and not looking at the other thing. It's always balance. Yin yang.
Yin yang. But I totally agree on the risk management side, right? Because I think if you have good risk management and good psychology, the strategy can be as simple, and you can be profitable out of it.
Yep.
So I think this is the 2 main components that people are always neglecting, especially for beginner traders, until they really got burned by the market. Then they'll slowly start to realize this. But what actually changed my trading is actually the risk management and psychology part as well.
Yep.
Yep.
That's the first and foremost, the most important thing. Because even if your engine, let's say, it's not so great yet, engine
As long
stay
as
running
it
rough,
moves.
the car can
Don't
move.
crash.
Don't crash. It's a small engine, it's fine. But your car is working fine, you'll still get to your destination, although maybe slower.
Yeah.
So a flashy 600 horsepower engine. Yes, once you're ready, once everything's ready, once your brakes are upgraded, once your tires are upgraded,
Ceramic brakes.
right? So it's always like what this guy, his account now is $10,000. He scaled his approach. So it's the same thing. You can't change one component without having the rest follow suit.
Because without the braking system, without the tires,
Yep.
it's gonna crash.
Yep.
So when you crash, you die. So I think in the market, it depends on whether if you're still hanging on.
Yep. Yep.
Are you gonna die out like very soon
Yep.
with big wins and big losses?
Yep.
Big losses generally just wipe people off.
Yep.
Like
Straight
people
away.
just tend to give up, right?
That's why big losses first. Make sure you don't get big losses. Stay in the game longer so you learn more.
So I think this guy could go very far in the
Definitely. I mean, he's improved a lot. So not much to say to this guy.
Yeah.
But kudos and keep it up.
Awesome job.
Yeah. All right. Cheers. See you next time. Bye bye.
Peace out.